Ara Poladian is back on this episode where we talk about a couple of his projects. So he has a 12-unit building in the Kitchener-Waterloo area that he's been working on. He's had some major construction going on there. He had structural problems that he had to address. So we talked a little bit about that process and the costs associated with remediating that issue. We also talked about his Fourplex project where he's adding 2 additional units there, and then his recent acquisition of 2 Sixplexes. So there's a lot of good content in there. Ara is a great guy, and I think you guys are going to enjoy what he has to share. If you do, make sure to leave us a review on the Apple Podcast platform. Make sure to share this with a friend or family member. I'm sure there's somebody out there that can use some good content to help them along their journey with real estate investing, and there's always tidbits that you can pick up from these episodes. So there you go. Enjoy the episode. I'm here with Ara Poladian, second time on the show. Actually, I think the first time you came was when we first met. From what I remember. Yeah, exactly. That's been cool. We've been golfing the last, 2 years, I think. We've golfed a couple of times. So welcome back to the show.
Thanks, George.
Let's start off. Do you want to tell me what's been going on with you? Anything new and exciting?
Yeah, we're taking the investing, I guess, to the next level. Keep acquiring properties in Cambridge, Kitchener, Waterloo area. That's like my main area of focus. I got licensed last year as a realtor, so I've been helping investors get into investment properties as well. And it's been going strong, man.
Yeah, you've been busy. You kind of started not that long ago, right? When did you first get started investing? Like actively being really active with it?
Yeah, actively would have been at the beginning of COVID.
Yeah, so 2020?
It's been about 4.5 years.
4.5 years.
Where I've been going, just pure investing. So background in structural engineering, construction. So that was easy for me to get into duplex conversions at the beginning. Yep. I got laid off from my job. We talked about this on the first episode. So that really just made me go full in, like my first duplex, like there every day, learning every aspect, while still figuring out the actual like investing side with like financing and all that stuff, because everything was new to me. Mm-hmm. I just had my own house at the time. And that's just kind of how it started. It was just kind of the snowball effect. Never stopped and always continuously learned, made mistakes, did some home run projects, and it was always about adapting. And it was actually really nice that we got to see a downturn in the market.
Yeah. Well, since you mentioned mistakes, because we don't often talk about mistakes on these things, we always celebrate our successes, but can you share some of the mistakes along the way? And maybe you can just do like a really quick recap of some of the early projects that you worked on.
Yeah, so everything was going like literally like probably anybody, any project they did was successful, whether it be a flip, a duplex conversion, because the market was just going up and up and up. But my very first duplex conversion was a full burr, pulled out 100% of my money within, 6 months. Mm-hmm. But then when I went to refinance, I had the option of variable rate at 1.5%.
Yep.
Or a fixed rate at 1.75.
Yeah.
And nobody was really talking about getting fixed mortgages.
Yeah.
And I went with the variable. That led me to buy my second duplex conversion. That one I got on a variable, and then I was able to refinance that. Again, full burr, got 100% money out. And
just in case anyone's listening and doesn't know what a full burr is, it's basically when you put money into a project to renovate it, and then you usually add value to the property. Maybe you add units or whatever, and then you refinance it after, and all the money that you put in to usually renovate it, you get it back, or in some cases, it's all the down payment and the initial cost that you put into the property plus the renovations that you get. You get all that back.
Yeah, exactly. So this is like everything, like down payment money, land transfer, insurance, property tax. Every penny that I put into it came out.
Yeah.
So that's why I call it a full burr. And but going back to the mistake where I have no intentions of selling that property. I still own it today. Didn't plan on refinancing it because the cash flow was super nice, and I pulled out all my money. So why would I refinance it again? So why weren't more people, talking about the value of fixing your rate, right? Everything was about refinancing and pulling out your capital, buy more. But I learned a tough lesson where when you're stabilized and you don't have intentions of selling, it's not that you can't sell. Obviously, there'd be a penalty if you had a really, really low mortgage and the rates went up. And that would be if you're desperate to sell or something like that. But if you truly had no intentions to sell and your project was complete, met all your expectations, there is a benefit to a fixed rate mortgage. So that was a huge lesson learned. And then I guess my third duplex conversion, if we fast forward to the third one, not running my numbers with some contingencies in rates going up. So that's the project still ended up being fine. Like it wasn't a full burr, but we were able to refinance. Or we haven't actually refinanced it yet, but we just kept the capital in that one. But cash flow neutral project, so it didn't really hurt me that badly. It just made my capital be locked in the project. But like you're not going to be able to go into real estate always expecting to pull out 100% of your money and just grow in that way. There's other ways to grow, whether it be partnering, putting capital together, buying something bigger. There's more ways to do it rather than just the expectation of I have X amount of dollars and I'm just going to keep recycling that guaranteed. I think that's the wrong way to look at it.
Yeah. Do you still find that if you were to look for a duplex project today, would you be able to do a full burr, you think, or do you think that would be a lot tougher?
If you found something like off market, like a steal of a deal, because like you make it on the buy, but if like I was just buying off the MLS, so I think those days are gone. I think duplex conversions actually, like for new investors, you have no tenants, you're not inheriting any tenants. So if you're okay with leaving some capital, it's still going to end up being better than buying a duplex, potentially having inherited tenants, and then hoping to refinance after. You're still probably going to be ahead because when you go to refinance, you might not pull all of your capital, but at least you'll pull out like your renovations and some of your down payment. So you might be left with like a net of like a 10% down payment and, cash flow neutral or positive with the rates being higher, but they're dropping now. So the numbers are actually making even better sense now. But like it is still, I don't tell my clients to like, that should be their number one option. But if that's something they want to do, if it meets their goals, I still think it makes sense.
Yeah. And so you did, to go back to your story, you did those 3 duplex conversions. Did you jump into an apartment building right after that? I know you did flips too.
Yeah. So during my third one, we bought our first Sixplex.
Okay.
Yeah. And then that's when the market took the turn with the rates. And then I just completely stopped even looking at duplex conversions and went full throttle with multi.
Yeah. So it's a 12 unit that you bought? Is that right?
Yeah. After the 6, we got a 12.
Yeah.
And then we got a Fourplex that we're converting to a Sixplex. And then now we have 2 more Sixplexes under contract.
Okay. So let's start with that 12plex.
Yeah.
You had a lot of issues there. So tell us a little bit about that. Maybe you don't go into full detail because you may have probably done it in the past, but kind of where you're at now and some of just an overview of what happened.
Yeah. So we took a risk on that project with it being tenanted. Yeah. But
12 units, it's not.
Yeah. But the thing was I saw the potential in it because very dilapidated building. We did our due diligence. Phase 1 was clean. Building inspection found some issues, and we did notice some cracks in the tile on the basement. And then what I didn't notice, what my inspector noticed, is every time you went up a floor in that exact same location, you saw cracking in the door frames, kind of like on a diagonal, which shows like some type of shifting. So we were actually able to use that to get a really, really good VTB. That was honestly, we were going to pull out if we couldn't get a VTB.
Yeah. Because
it just would have been too much carrying costs to go get like a bridge financing or anything like that. So we were able to get like a 75% VTB at like 5% interest only, which we probably at the time would have still been able to get a 75% mortgage, but like probably pushing like 10% interest only, and then pay a bunch of fees to get that kind of mortgage. So
how long was the term?
5 year.
Oh, okay.
Yeah.
That's amazing.
Yeah.
Yeah.
So, and the 5-year wasn't even negotiated. That's what the seller wanted. And it worked out really well because we had over 100,000 alone in interest savings per year, just with that spread. Because we bought that property for like 2.4, 75% mortgage, so 1.8. So depending like between a 5 and a 10, you're basically at like 90,000 or 180,000.
Yep.
Plus like the points and all that stuff. So that was huge. And then I had a really good feeling. Again, it's a risk. Like you have to take risks in life sometimes. Yeah. I am a bit more like I'll take on risk.
Yep.
But because of the issues with the building itself. So if you picture like a building as a rectangle, right? With the foundation walls as the perimeter, you'll always have some interior load-bearing walls as well. So if you cut the building in half and then you cut that side in half again, so a quarter, there was a load-bearing wall running right through there. And that's where the building was sinking. So I wasn't worried about the structure. I'm a structural engineer as well, because we didn't see major cracks in the foundation. We didn't see, you can't even tell from the outside anything was wrong with the building. So that kind of gave me the idea, okay, we probably have some soil settling. The building is actually fine, but it's sinking because of the soil. So we did soil testing, all this kind of stuff. And yeah, we figured out that we did some test piles, and what they did was they had good soil, compacted soil for the perimeter, but for some reason on that side of the building only, underneath that slab, they had put in, it's called peat gravel or peat soil. It's literally like organics, like it's like garden soil.
Yeah.
So that has no compressive strength.
Right.
So that's where the building was sinking. It was pretty funny actually. When we had the test pile open and it was near a window, when we came back like a week later, there was like weeds growing out of it. So talking to my engineer, is actually a company that I used to work for her, a really, really good firm in Kitchener. We figured out a solution to mediate everything. A little bit of a complicated scenario, but it's basically shore the entire building using all like the perimeter walls, because the perimeter walls were all good. Rip out all the concrete, install these things called heel.
Across the entire building?
Just the one side.
Oh, just the one side.
Yeah.
Yeah. Okay. Rip out the concrete.
Yeah. So it was basically half of the building.
Yeah.
A little bit less than half. And then we installed these things called helical piles. They're basically just like these 7-foot sections, but you can add extensions so you can go as deep as you want. So essentially it's like, instead of removing all that soil, because it's not like toxic or anything like that, it just has no compressive strength.
Yeah.
So what they do is basically they go as deep as they need to by adding these like 7-foot pile extensions. And they have like a machine that like calculates all the torque, and it's all done through engineering. And once they hit their torque, they know they can stop.
So is there concrete involved in this, or is just
not yet?
What does it look like exactly?
It literally looks like just a maybe 6-inch diameter metal like rod.
Okay.
That just like, they have these machines that just like piles like.
Is it hollow or is it?
Yeah, it's hollow.
It's hollow.
Yeah.
Okay. Yeah.
And it has like connections at the bottom and the top and all that stuff.
Yeah.
And so it just gets basically drilled into as deep into the ground, and it was a bit over designed, but like some areas like barely got a 7-foot section, which means the soil was already pretty good.
Yeah.
But the really bad sections, like we went like 28 feet down.
Wow.
Yeah. So it needed like 4 extensions.
Yeah. Yeah.
And that was in the interior load-bearing wall. So once that's done, now you have like basically a new foundation, essentially.
So do you know if that happened when the building was originally built?
Yep.
Did they just not use the right soil at that point, or did they how did that happen?
Yeah, it could have been just like laziness, uneducated contractor thinking they can save money and just backfill the slab because they thought nothing would happen. It's just a slab.
Yeah.
With this soil. So yeah, it was negligence back in like the 60s.
So does this building have a below grade basement, or is it like above grade?
Partially below grade, yeah.
Partially below grade, yeah. Okay.
So it's one of those typical like 2.5-story multifamily buildings.
Yeah.
So you walk in, you take like half a set of steps downstairs.
Yeah.
So that's where all the work was done.
Okay, so you're probably like 6 feet underground or something like that. Maybe a little.
A little bit, yeah, but a bit less.
A bit less. Okay. Yeah.
So now you have proper, foundation below. So now basically what you do is you tie in everything with rebar. Like we're talking like a full cage of steel where this new slab's going to be poured.
Okay.
And then when you pour the concrete, it all gets tied in.
To the helical piles. Yeah.
So now you have a structural slab. So it's no longer like a 4-inch just concrete slab. It's like an 8-inch structural slab with these things called grade beams, which is even deeper. Like they were like 12 inches deep that ran across your load-bearing portions. So now when you go build your new walls, they sit on those grade beams, which is all connected to the helical piles.
So you overkilled this, or that's how it's supposed to be?
That's how it's supposed to be.
Okay. Yeah.
We probably like. I mean, I don't want to say we like. Obviously, in engineering, like you always have a safety factor.
Yeah.
You're always over designing, but we did whatever the engineers wanted. So now, essentially, you can think of it. If you removed all this, like all that soil, if you wanted to, the building would still stand.
Yeah.
Because none of that matters anymore. Because now you're going like minimum 7 feet deep. Some areas even more. So your building is completely shored.
Yeah.
So then we poured a new concrete slab. And that's it. Now you just build your walls and you do everything you need to do.
And then that area that you addressed, those are going to be units as well?
Yep.
Yeah. Okay.
Yep.
Can you share?
And then because the whole area portion from top to bottom was sinking, we actually jacked the building up from that point too, which is a pretty cool.
After the concrete was poured?
After the concrete was poured. We raised the building like 8 inches.
Wow.
Yeah.
Cool. Yeah, it sounds like an exciting project for a structural engineer.
Yeah, it's my. Honestly, I'd do those all day.
Yeah,
it is intense. It takes a lot of. It's not for everybody. I wouldn't recommend someone that just wants to be more passive, not passive, but like more simple, like unit turnover. When people leave, renovate. It's not for them.
Yeah.
But for someone like me, that again, like I run a construction company. My guys are there 5 days a week, 8 to 4:30 every day. It was something we could take on.
Yeah. Can you share like some of the costs that were associated with this particular part of the project?
Yeah, like that portion. It's gonna probably end up about $250,000 to do everything properly.
And is that more at the rate that you got because you have a construction crew? Like if some other person were to do this project, would they experience more expenses on it?
Maybe a bit. It's not like my guys did the helical piles. It's not like my guys ripped out the concrete. It's not like my guys put the rebar in or poured the new concrete. Like we had specialized trades for all that stuff.
Yeah.
Even jacking up the building. So where my guys jump in is like now we're framing the basement ourselves,
right?
Stuff like that.
Right.
So that's where you'd see the savings. But the actual helical pile part, no, it should be around that for people.
Okay. Yeah. Okay. And the numbers still make sense. Even like, were you anticipating this cost when you were doing your due diligence? The
second we found out that there was helical piles, I had budgeted. I actually had budgeted like $250,000.
Okay.
Yeah.
Okay. Yeah. And where are you at right now with the project?
So the project, we were able to get 11 out of the 12 units vacant.
Yeah.
And that was because, again, I took the risk knowing that there's cockroaches in the building's sinking, and nobody seemed like extremely like long-term. We had some immigrants in the building and stuff like that. So I said, you know what? I think I'm going to be able to, we're doing everything properly, like building permits, everything. So we said, I think this will work. Like, I think if I just have like a normal conversation with everybody, kind of talking to them what's going on, the extensive renovations that are required, I shouldn't have any issues. And I was right for 11 out of the 12. They all just took the cash for keys, and we gave them a couple free months of rent so they can find a new place. And it all worked out amazing, except for one guy who's been living there. With all this that I've explained, we've already done it all.
Yeah.
And he's been there the whole time.
Yeah. So you did the cash for keys. You got some of the tenants out that way. Did you do N13s in that situation, or did you just kind of have agreements?
And N11s.
Yeah.
Everybody left before we even started construction.
Yeah.
We had already applied for permits, but we didn't start any of the work. We gave everybody time and the comfort to just kind of leave on their own terms. But yeah, I'm doing an N13 with the last one.
With the last one, okay. And did you have a paralegal assist you with all this, or were you
Yep.
kind of negotiating everything?
I did all the cash for keys and 11s myself,
Yep.
but the M13 process, yeah, I have a paralegal.
Okay. Where are you at with that? You're just waiting for a hearing?
We were supposed to have a hearing, and then he countersued us for damages.
Oh, really?
Yeah.
Oh, interesting.
So then we had to like combine the two now,
Mm-hmm.
and then it was supposed to be in September, and it got pushed now. I didn't even have it.
Oh, wow. Yeah, that happens a lot, eh?
Yeah.
It's a weird system.
I was really excited to see what the outcome of the M13 would have been.
Yeah.
Given the circumstances, because I've never done it before.
Yeah.
But then he just last minute countersued me for like 50% of his rent back
Yeah.
for lack of maintenance, and it's just like I can't wait to see what the LTP is going to say, because
Yeah.
like what do you mean by maintenance? Like it's a construction zone. Like
Yeah.
I don't know what jurisdiction would even allow him to be living there.
Yeah.
It doesn't make any sense for him to be able to live there.
Right.
Yeah.
So at this point, you said you're framing, or are you past that already?
Yeah, so we did the building in two sections. So like picture like the bad side, the sinking side, and the good side, quote unquote good side. So the good side, he's living there.
Yeah.
So we couldn't renovate his unit. But the 5 out of the other 6, we've already passed all of our inspections. Drywalling is basically wrapped up. Mudding taping is almost wrapped up. And my painter's already in. Flooring's already ordered.
So you took everything down to the studs?
Basically.
Yeah. Why did you do
those
that?
5 units, we were actually able to keep some of the plaster.
Okay.
But so that portion, we needed to take a lot of the drywall down because we redid all the plumbing. We ripped out the boiler. We ripped out all the rads, and we're installing heat pumps in every single unit.
For for the CMHC MLI Select?
Yep.
Yeah.
Yeah. So before the rule change, we were actually like, we got approved for 100 points, like without even we replaced the windows, but even without that, because you need like a 40% baseline, like a decrease in your carbon footprint, we were at like 53% without even looking at some of the stuff. So we passed with flying colors. And the boiler was an older boiler, and it was already separate hydrometers. So we said, you know what, this is a good opportunity to just put heat pumps in. They'll be connected to the hydro. It'll cut our expenses, which will increase the value of the property, and it gets us the approval. So we're still approved for like the 50 points. And then we're actually able to, because we're doing all the plumbing, we split all the water meters too, like with the city, not like sub-metering, like full on 12 water meters.
So you needed a water meter tree, is that right?
Yeah, it's basically in the mechanical room.
In the mechanical room, so you had to like start everything from scratch, run all new plumbing, right?
Basically, yeah.
Yeah,
And we were going to do that anyways.
Yeah.
We were going to do that anyway, so why not split the meters?
What about the guy that's still there? What did you do with his?
Yeah, I don't know. I don't even know what's going to happen with that. We split his meter.
Yeah, okay.
If the LTV is going to make me pay for that 1 meter or whatever, if he's even going to leave, I don't even know. But we split his meter too, yeah.
Okay.
Yeah, I'm not going to like go off my building permits and my plans because the LTB is a broken system.
Yeah. Okay. Because I had a situation, so I have an 11 unit, and I was trying to separate the water meters because every unit has its own hot water tank and like has its own kind of water line separated already. So I thought, okay, well, through the city, I should be able to just separate it. But turns out they needed a water meter tree in my mechanical room, and I would have had to like redo all the plumbing in the building in order to do that. And it just didn't make sense for me in that property.
Yeah. It only made sense for us because we were doing everything basically from scratch.
So are you like almost done renovating the good side, or?
Yep. Like kitchens are being ordered, flooring's already ordered.
Yeah.
My painter's in there like literally right now. So those 5 units should be ready December 1st.
Did you have to wait for all the structural work to be done before you could start doing the finishes on the good side, or?
No, I would say for the finishes, but not for like all the rough-ins, for the framing, fire separation. We removed a load bearing wall in every single unit.
Oh yeah.
So we did all that work prior.
Okay.
Yeah, we got the inspector's been there maybe 15 times.
Can you share what you project the numbers to look like? So you said you bought it for 2.4, was it?
Yeah, we bought it for like 2.4.
Yeah.
Renovation budget's about $1 million.
Yeah. For
the entire building, and then with holding costs and everything like that, probably going to be in the high 3s. Pushing 4, high 3s.
Yeah.
And then just off my numbers, because the utilities are basically not zero, but the only utility bill we'll have is a common area hydro.
Mm-hmm. So do you have laundry as well? And is it every unit or did you
In-suite laundry in every unit?
in-suite laundry?
Yeah.
Okay. Yeah.
So, so even if that's $100 a month, which is probably high for common area hydro, but even if it is, it's like $1,200
Mm-hmm.
compared to whatever it was before, like 16,000 a year. And then the unit split is really, really nice. It's 4 3-bedrooms
Okay.
and 8 2-bedrooms.
Yeah, that's
So-
really great.
And the parking lot is enough to even provide the 3 bedrooms with 2 parking spots each.
Yep.
And then the 2 bedrooms, 1 parking spot, maybe even a couple with 2. And I noticed renting out units, a lot more people are asking for 2 parking spots.
Yeah.
So that's going to really help get good rents, but even like pretty safe projections, like 2 bedrooms rent about 2,200, 3 bedrooms will probably get like 24 with the 2 parking spots. That's like 27,000 in rent,
Mm-hmm.
right? So it's a 12-plex, but it almost operates like a 16-plex.
Yeah, that's really good rent.
Yeah.
27,000.
Yeah.
Yeah.
So based off those numbers, we should be anywhere between like 4.7, 4.8 to 5 million
Yep.
on the appraisal. And that's off like a 5.25 cap rate.
Yep.
And then with MLI Select, I'm not into like 95. Even if we got approved for 95%, I wouldn't want to do that. I
Right.
think it's just too much.
Yep.
Too much risk. Like you're not, I guess risk in a sense, but I just don't feel comfortable. Like I like leaving equity in properties. So my goal is to just pull out 100% of the money.
Okay.
MLI Select, 10-year fixed rate.
So you just want 4 million basically.
Yeah.
Yeah.
Yeah. So whatever it gets appraised for, if it's like 4.7, 4.8, we'll need like an 80% mortgage.
Yep.
To pull out basically everything. And then that gives some room because the rates are so much better. The amortization's higher.
Yeah.
That'll leave some pretty good cash flow still. And that's it. The building's turned over and go to the next one.
And you think this will be done in the next year? Like it'll be fully
Yeah,
done?
in spring. It'll be done in spring.
In the spring, everything.
Depending on the unknowns of the 12th unit.
Yeah.
But we'll cross that bridge when it comes to it. But 11 out of the 12 will be done by spring.
Your projection is with all 12 units turnover or?
Yes.
Yeah. Okay.
Yes.
So it could be a little bit lower depending on, hopefully things work out the way you want them to, but it could be a little bit lower potentially.
Yeah, no matter what, the thing is though, like no matter what, at some point the N13, I'm assuming, has to play.
Yeah.
And we have to renovate that unit.
What's the N13 for?
Renovating his unit.
Yeah, but is there anything in particular? Like, is it just cosmetic renovations or there's structural? There's
Everything.
Okay.
Yeah, so he's
same as the other ones, right?
Yeah,
like
yeah.
removing
He's getting a
bearings.
load-bearing wall removed. He's getting a heat pump system. He's getting in-suite laundry.
Yeah.
Like it doesn't even make sense to me how it's even his unit anymore. Like it's a completely different unit.
Yeah.
We've talked to him a bunch of times to let him know what's going on. But to me, worst case scenario, they're gonna make me just have him come back.
Yeah.
And then maybe I can apply for like a above guideline rent increase or whatever, which will be negligent, like be so small.
Yeah. Yeah.
Like the thing is, like he's not a bad guy.
Yeah.
Like he pays his rent.
Of course.
He's just not. He's. I don't know what his intentions are. I think he's just a little bit. I don't know. Lost.
Yeah.
Just trying to put the slumlord title on me. Which makes absolutely no sense. He's called the cops on me before for cutting his internet, which my guys did by accident. He's called the building department to try to shut us down and get a stop work order, which didn't work. We weren't doing anything wrong.
Right.
So like I have proof that he's tried to shut me down multiple times and it never worked. So it's like, how could the LTB look at like I'm doing something wrong?
Yeah. Yeah. I guess you'll have to wait and see what happens, right?
We're gonna wait and see. Yeah.
Yeah.
The numbers still are gonna work. Like he pays like, 9 something for a 2-bed. So yeah,
Wow.
that's
why he's.
That's exactly why he doesn't want to leave. But it doesn't make any sense. His argument is, if he leaves, he's gonna have to pay X, whatever you want to call it. Even if you want to call it top of the market, 2,200.
Yeah.
It's like you're paying 2,200 for like a condo style, beautifully renovated, all the amenities with that. He's paying 900 for a unit that was completely unrenovated, didn't have a in-suite laundry, didn't have a dishwasher, had cockroaches in it, just completely falling apart type of property, that won't rent for 2,200. That's the mistake. That's where his argument to me makes no sense. You can't compare what he was living in, because even if I was a slumlord and I just wanted him out, what could I rent that unit for? I can't rent it for 2,000 a month.
Mm-hmm.
Or if I did, what kind of tenants would I have that would be willing to live with cockroaches that aren't going away?
Yeah.
And all that stuff. So the argument doesn't make sense. If you just look at it face value, he's paying 900, but somebody has to put 50 to 60,000 into that unit to make it 2,200.
Yeah.
Right.
Yeah.
So you're not comparing apples to apples there.
I had a question actually, now I forgot, but the cockroach issue, that's all been resolved, right? Yeah.
The cockroach issue was from like dirty tenants.
Yeah.
And the previous landlord was great. Is a great guy. I have a really good relationship with him. Good landlord. Tried to clean the mess multiple times by spraying, but when you're just putting like a Band-Aid over an open wound, like you're not actually solving the problem. And the problem was getting these people out, getting their furniture out, getting their bad habits out, which solved the problem. Yeah.
Yeah. I've had my share of pests at properties, and I know that it can be really challenging sometimes if the people living there don't cooperate, because usually they get a list of things they have to do before treatment, right? And if they don't do that, if they don't leave baseboards exposed, if they're covered with furniture, stuff like that, it's never going to address the problem.
Exactly.
Did you have to do any upgrades to your hydro? Like, was the service was okay?
The service into the building was good.
Yeah.
Yeah. We just we upgraded everyone's panel to make sure they have a 100 amp panel.
So what did you have into the building? Was it 400 amps?
Yeah.
Yeah, and that was enough for the 12 units with dishwashers and laundry in every single unit.
Yep.
That's great.
Yeah.
Yeah. Were you looking to add any additional units to that building?
No, I thought about it, but it didn't make sense. Like there's a boiler room and a laundry room, but we ended up using all that space for the hydro meters. With the hydro meters already there, the water meters, the 12 water heaters. Mm-hmm. So we just use that space for our stuff.
Okay.
Yeah.
Makes sense.
There is a portion in the back. It's a huge lot. There's a portion in the back that they used to use for like a campfire type thing.
Yep.
We might put a bunch of storage sheds there, just to add some income, or at least even just get the top rents. So everyone has their own storage kind of locker, but it's exterior. But unit wise, no, we're leaving it the way it is.
Okay. Let's move on to your other project. So right after that, I think you bought a Fourplex, was it?
Yeah, we got a Fourplex. That was like an exclusive deal.
Yeah.
That one was a lot shorter of a time span, a lot less work. Still a fantastic deal. I'm more passionate about like the bigger buildings, like scaling up more units under one roof. But this one just didn't make sense to not take it on. It was basically a Fourplex. The owner lived upstairs.
Yeah.
His kids lived in the other unit, and then his buddy lived on the main floor. Mm-hmm. The buddy was leaving. The other unit was vacant, and they were moving to like Europe.
Yeah.
So on close, it was going to be a fully vacant Fourplex. Mm-hmm. And then I was able to negotiate him letting us do the renovations prior to closing.
Yeah.
So, and again, MLI Select, heat pumps in every unit.
Because you're adding units, just to be clear, because you can't get MLI Select on a Fourplex.
Correct.
Yeah.
Correct. The value add in this project was in the basement. It looked like it's supposed to be a Sixplex, but the basement had 4 garages. Mm-hmm. And we already got zoning approval. It wasn't a zoning amendment. It was just a certificate of zoning to add the 2 units. So now it's building permit time.
And you got that before closing?
During, yeah, I did.
Yeah, okay.
Yeah, I didn't get any building permits. We waited to close on that, but yeah, I applied for all the zoning stuff before closing.
And how were you able to do that? Did you have to have the seller sign off on all the requests, or
Nope.
As the buyer you were able to do that?
Yeah, as the buyer, we were able to do it.
Okay.
Yeah, because you're not actually doing any work. The city is just approving that this building can have.
Right.
It's zoned for 2 more units.
Right.
Now, building permit is a completely different issue, right?
Yeah.
Because the building they might say like, oh, you don't have enough head height. You have to do this. You have to do that. Mm-hmm. Do a minor variance, whatever the case is. But just pure parking spots, all that stuff, we're good to go.
Okay.
Yeah.
Yeah.
So we were able to close fully renovated. And the nice thing was the owner's 2 units were like beautifully renovated. He renovated them before he moved in. Mm-hmm. So that one, we literally just had to add the heat pumps. two interior units. We just did like a typical cosmetic plus new electrical, cleaned up the plumbing, all that stuff. Rented that all out. And the reason why I talk about the rents in Kitchener is because like I just did it. So that building, it took a little bit longer to rent out, but we rented all 4 units out for basically $22.50 a month on average.
Okay. Yeah.
And so that's like $9,000.
Yeah.
For the 4 units. So the rents are good. Obviously it's a bit harder now. There is more supply. So, before you used to put an ad up and you'd have like 50 people calling you. It takes a little bit longer now, but the quality of the tenants is still there, and the market is still there. I would just be more realistic with running your numbers. Even if it's at like $2,250 for all 2 beds, that's why I'm saying $2,200.
Mm-hmm.
It's $2,200 for units that will actually be even nicer. Like this building's, it's in a better area, the 12-plex.
Yeah. So
I'm confident with the rent numbers. But yeah, so we bought that one for 1.25.
Okay.
We're all of our renovations are going to be about 350,000. That's including the 2 units. So that would be 1.6 all in, even with holding costs, call it 1.7. Yeah, conservatively you should get appraised for like 2.2.
Wow. Okay, that's amazing for a sixplex.
Yeah.
Yeah. All right. And when do you think that one will be done?
We're gonna, we obviously have way too much going on right now to start. So I'm just slowly getting the building permits, getting all that set. The plan is to start in spring 2025.
Okay.
So when the 12-plex is done, move to this, and then refinance both with MLS Select. And it's working out kind of really nicely because the rates are just coming down.
Yeah.
So hopefully when we refinance both of them, it's kind of like not the bottom, but pretty low rates, and that'll just help us out.
I was a little bit unlucky with timing because I just did a CMHC mortgage on a property earlier this year, and the 5-year CMB was at like 4% when I closed, and it's down to like about 3% now. It's a pretty substantial drop.
Did you do a 5-year or 10-year?
I did a 5-year.
And so what was the rate at that time?
I think it was 4.05 plus 1%.
So you got basically 5%.
Yeah, I think if I remember, it was just over 5%.
Yeah, so we're planning on doing both of them 10 years.
Mm-hmm.
So yeah, even if we're at 4%.
Yep.
Like I was running my numbers at 4.5%. So even if we get 4, it's even better.
Yeah.
And both projects we'll be able to pull out all of our money, and I don't want to pull out anything more than just the money we put in, and
yeah,
that's it. Own a building basically with quote unquote no money down.
Yep. Cash
flow. Projected numbers are probably the Sixplex will probably cash flow like 2,000, and the 12-plex like 4,000 to 5,000.
Yep.
Yeah. It's probably going to be somewhere between six on the low end, 8 on the really high end on the 2 buildings combined.
What do you think you'll do with that cash flow? Like, I know a lot of people say you can't really use the cash flow from a building because there's always stuff that comes up. But in your case, your 12-plex is going to be fully renovated. Everything's brand new. So there shouldn't be any major maintenance moving forward other than if there's something unexpected. But do you plan on doing something with that cash flow?
Not really. No. Just keep it in the corpse. Keep just getting that grow. Use it for more properties.
Yeah.
And then all the, like, I don't take on partners. It's just basically like a family ordeal. It's mainly just like my father and I. So yeah, like our goal is just the cash flow. Cash flow is really obviously really, really important. For some people, they want to use that to retire. For other people, it's just a nice, call it 6,000. That's 72 grand a year. Mm-hmm. That's coming in before tax. That's just like your safety net.
Yeah.
For if anything does come up, like for example, on the 12-plex, we're not replacing the shingles. They're pretty good, but eventually they are going to come out, right? We're going to have to replace the shingles. Yeah. So even though that cash flow is incorporating like a 5% as well for maintenance, I'm not doing like 10% for maintenance and CapEx. So it's just even more of a buffer.
Right. Yeah, makes sense. And then the last thing, I think the newest thing you mentioned was 2 Sixplexes that you purchased.
Yeah, we got 2 Sixplexes that we're still just we're under contract. We haven't closed on any of them, And again, those ones are this one is a completely different style. These are going to be just slow and steady. The same seller that sold me the 12-plex sold me these.
Okay.
And he put VTBs on them as well.
Are they side by side?
They're not side by side, but this is the cool part. So this 4 to 6 unit conversion I'm talking about, the one Sixplex he sold me is across the street.
Okay.
And then when you go from that street to my 12-plex, it's only like 4 kilometers away.
Yep.
The other Sixplex he's selling me is in between them.
Okay.
So I thought of it as like a property management standpoint, as a proximity standpoint. It's like 4 buildings basically. How many units would that be? 30 units? Yeah, 6 times 24 units. No, 30 units. 30 units within 4 kilometers from each other. So that's why we're doing that one. And then, really good. We got pretty good prices, fair prices. I'm not going to say they're steal of prices on those ones, but really good unit mixes as well. The one Sixplex is like 5 2s and 1 1.
Yep.
The other one is actually 5 3s and 1 2-bedroom.
Okay.
So really good unit mixes. And yeah, proximity to everything. Those ones we haven't closed yet, but just with tenant turnover, renovate the units. We have 5 years to. Again, it's a 5-year VTB, so we have 5 years to clean up the building and turn over some units, and then.
Are they fully occupied?
The one is going to have 1 vacancy. The other one's fully occupied.
So you just kind of like slowly you'll turn over as the tenants move.
I'll probably end up when we close, just have a conversation with everybody. If they're thinking of moving, would they be willing to move if we compensate them and stuff like that? Like it's just like a normal conversation. And if that gets some vacancies, all the better.
Yep.
But the nice thing is with the VTB, like obviously we don't get mortgage pay down, but we're cash flow positive on both properties on the buy. So again, that's why it's safe.
Yeah. How does that conversation usually, like, how do you plan on having that conversation with the tenants that are there? I know you kind of just said it, but like, what's your approach usually?
I think in any type of negotiation, like I feel like I'm fairly good in negotiating. It might be my background. Armenians love to negotiate everything, but you can't, like in sales and everything, you can't, you have to make them feel like they won in a sense, right? So you're the upside of them leaving. So your goal is to now make it for they feel like they're winning, and not feel like they're winning as in tricking them, but just to provide what they are looking for. And you never, like a lot of the times that's all it takes, right? So maybe a dollar figure, let's say, they don't care about that. But if you talk about free rent, even though it's the same dollar value, the difference of your language can really impact them differently. So that's what we did at the 12-plex, right? We had, I basically offered them X amount. Plus I said, I'll give you your last month's rent back. And I said, I'll let you stay 2 months to find a new place, and you don't have to pay any rent. And the reason why I did that is because when we closed on that 12-plex, he actually gave us a delayed start of the mortgage.
Okay.
So we actually had 4 months of not having to pay any interest, right? So if I don't have to pay interest, now I can use that to negotiate. Hey, you guys don't have to pay any rent. Don't worry about it.
Right.
And instead of just saying them, hey, we'll give you X. Can you leave? Right. It's a completely, even though that X is still the same number as what they're getting, but they're getting it in different forms.
Yeah.
And it might be more appealing. So it's just knowing who you're talking to and coming up with a win-win solution.
Yeah.
Like it's like in anything. Like if you're trying to raise money or you're trying to get a partner, you can't say like, hey, I get all the like if you don't put any money in, let's say, I don't have to put any money in. You have to put all the money in, right? They might just be like, okay, that doesn't seem fair. But if you change the conversation to say, I'm going to be doing all the work, right? You can continue your high paying job. You don't have to worry about any of the stress of finding the property, financing the property, any of that. And, your benefit that you bring to the table is your capital, right? My benefit is my expertise, and look what I can do. And I think we'd make a great team. So it's a completely different way of speaking and really thinking of like win-win solutions.
Yeah. That's a great way to approach it. I think it's always important to have that in mind when you are negotiating, especially with tenants, because if you, like you said, if you go in there with the intention that I just want to get them out because it's going to improve the value of my building, well, usually things don't work that way, right?
Yeah.
They're going to put up a fight. So it makes sense.
I could give you another example. Our very, very first Sixplex, I did the same thing. I just talked to everybody. The one tenant, like, it was kind of a more aggressive approach because the other tenants didn't feel safe with her being there. I think she had like 3 different fires in her unit.
Mm-hmm.
And we bought the building after the one incident. I think that was like the last straw for the landlord. That's what she was selling. So that one was more like, you know, there's no choice. Like, there's no, like, I have to negotiate this. Like, you can't come back. Like, it's just not going to work. But for the other people in that building, the one seemed like they would live there forever. But I basically came up with a offer for them, which was good. But I said, hey, listen, if you don't feel comfortable with this, I can also offer you this and leave whenever, like, anytime you want. This offer will still be on the table. Mm-hmm. So they came back to me like a year later and they said, hey, the market's turning and we think we can actually afford a house. And with your compensation, it'll actually help us with the down payment.
Yeah.
You know, I think we're going to buy a house. And they did. They bought a house. They took the smaller portion of what we were going to compensate them that they could use towards their new house. Mm-hmm. And we left like in very good terms.
Yeah.
Right. Yeah. And at the beginning, like, they didn't like me too much. They thought, oh, what's this guy's intentions? But once I kind of tell them like what's going on, a year later it came about. I have another tenant in that building, extremely elderly couple. They've been there for like 20 years. When I started talking to them and they told me their situation, I said, you guys don't ever have to leave. Like, I can't come up with a win-win scenario if you guys are elderly dealing with health issues and then like me saying like, yeah, but if I give you money, would you leave? It's like, no, like, you guys live your lives comfortably. Like, you're an elderly couple. Like, at the end of the day, you have to have a heart too. Yeah. Right. It's not all just about dollar figures. And they're great tenants. Like, they pay their rent. They take care of their unit. Like, they renovate their own unit. Mm-hmm. So, you have to read the room. You have to put yourself in their situation. And I think that's kind of where the best negotiation starts.
Yeah, for sure. And some people are in a position where they have to negotiate for whatever reason because they're in a tough spot or they just can't take on the negative cash flow anymore because, rates have increased or whatever. So everybody has their own situation. But I guess the last question from me would be, what's the future going to look like for you? Are you just going to continue to buy apartment buildings and grow that way? Or do you have a different idea in mind?
Yeah, like, I'm always open for adapting. But right now the main goal where I spend the majority of my time is apartment buildings in Cambridge, Kitchener, Waterloo. I have been ramping up my realtor license more. So I'd love to help like clients that are interested in KWC. I would definitely say I'm like a market expert at this point. I can definitely help people whether they want the smaller buildings, whether they want to go build their bigger buildings. That's where I'm leaning towards, is the bigger buildings now that we have a track record. I think people can start with like a 20-unit building if it fits for their situation. But I also don't think there's anything wrong with somebody starting with a triplex. If the numbers make sense, if it doesn't put them in extremely, desperate situation with capital, with reserve funds and all that stuff, I don't think there's anything wrong with that. If they have no properties, I think a triplex in Kitchener is a lot better than not doing anything or always looking for that shiny object, And then there's a lot of buzz out there about going to the States. But in my opinion, it's like, okay, like, tell everyone to leave Ontario. That just makes it less competitive for me. Like, I know my numbers, I know what works for me, and I'm going to keep going.
Yeah, exactly. I feel the same way about staying here.
Yeah.
Although there's a lot of talk about going to the US or to Alberta or whatever.
Yeah, like, don't get me wrong. I would love to eventually diversify. But I was actually just in a conference in Dallas. Yeah. And the one guy was talking about how diversifying can make you broke, right? Because if you say I want to invest in Alberta, I'm going to stay in Ontario a little bit, I'm going to go to the States, I'm going to do this, I'm going to do all these other I'm going to buy a business here. It's like, it takes you away from your niche. And if your niche is like my niche is value add apartment buildings in KWC. That's where I succeed at, and that's where I'm going to find the most success. I'm going to stick to it. If we come into a situation where we don't have deal flow, and I am going to do a little bit of market research in the States to potentially diversify in the sense with the two different markets like America and Canada. But I'm not going to just sit there and be like, I'm done, completely done, and I'm going full into the US. Not going to do that.
Yeah.
Unless I saw extreme red flags, which I don't see.
Right. Yeah. There's so many different ways to become wealthy and to build your wealth. So there's no right or wrong way, but I think, like you said, being focused and sticking to one market and one niche is ideal. And then maybe when you get to a certain point, if you want to diversify a little bit, then that's
I would even call it more adapting. Instead of saying diversifying, I would say adapting. Like, I understand the value in, having something in the States, right? Even if it's just like one apartment building in the States. Like, the numbers are great there. There's an argument that there's more opportunity there for sure. And if, you're stuck and the US makes sense for you, go for it.
Yeah.
Right. But I know what works for me. And I take ego out of it completely. Like, I'm an open book. Like, I'll talk about my mistakes, my home runs. But I think I think it's very clear, and it's pretty big in our industry, to see people that are doing things for their own ego rather than for their own interests. Like, I have 4 kids. My biggest goal is to provide them with the opportunity my dad provided me. My dad's a successful entrepreneur, and he provided me with a great life, and it's my responsibility to take that and grow. Yeah. So I owe it to my 4 children now to do the same, right? I don't care about a number count, like a door count. Look at me, look at my followers on social media. I really don't care about any of that stuff. I'm just to the numbers. Like, I love to help people. And I know the impact just one rental property would make for somebody. Yeah, 100%. Just to... Any final thoughts, like, before we finish things off? Anything else you want to add? Not really. Like, I think we talked about everything. We didn't talk much about flips, but that's fine. I've talked about that enough. Yeah. We love flipping as well. Not with huge numbers, but we're usually flipping one at a time, which has worked out really, really well for us. Actually, my latest flip is the first time where I'm going to be break even, potentially at a loss. Oh, yeah? Yeah, it was the first time. Yeah. And it was because I came out of my market. I didn't stick to my niche and thought we can just kind of flip anywhere in Ontario. And we were up in the Muskokas, beautiful product, like one of my best products. But again, we just didn't know the market as well, and underestimated the fact that we can flip anywhere, and didn't realize like different markets have different types of contractors, different types of pricing and all that stuff. So whatever it ends up being, if it's a 10,000 loss break even, the lessons learned are huge. Like I learned so much just from what people expect, what are important for things, over renovating, all that stuff. But yeah, other than that one, we've basically been doing one flip at a time for a couple of years now, and they've always been they've always been good.
Yeah, I've heard that a lot, actually, that people have had a bit more of a struggle with flipping the last probably year or so. And I think that's normal given the way the market has gone, but also, like you said, new market. So that happens, right?
Yeah, and it's funny, the ARV wasn't the issue. The ARV is actually pretty close to what we expected. We just ran into issue, like it was basically all renovation budget. Yeah, is what killed us on this one. But yeah, that's basically it.
Yeah, well, it's always a learning experience, right? You take that to the next one. So
100%.
To finish things off, how do people get in touch with you? And what's the best way to do that?
Yeah, I'm not overly active, but we're kind of active on Instagram. But I check all my DMs. I'll reach back to you. So Instagram is a great way. Email. I can share you my work email that they can email me at. My website, which is Poladianconstruction.com, I believe, .ca or .com. They can message me directly through the website, or they can email me at era@poladianconstruction.ca. But yeah, email, Instagram, or my website, you'll definitely get a hold of me.
Okay. We'll make sure to include the right website in the show notes.
Yeah.
But yeah, thanks for doing this. Appreciate you coming by, and we'll talk again soon.
Yeah. Thanks, George.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.